Hello, it's Tuesday, May 13th, 2014. It's 8:03 a.m. Chicago time. Thanks for joining me as always. Trading futures, options on futures, and foreign currency involves substantial risk of loss. It is not suitable for all investors. My personal opinions, market data, and recommendations are subject to change without notice. Past performance is not indicative of future results. Quick overview. The overnight, the German May ZU economic sentiment misses 33.1 versus 40. This is an important number. This is our consumer, like a consumer confidence type of release. The ZU indicates that notes indications that Germany will not be able to maintain a high growth rate going forward. That's a pretty bearish thing to say right at the high year here in the U.S. The Ukrainian state Donetsk referendum was won by pro-Russian separatists. These separatists are calling for Russia to annex that state from the Ukraine. That's probably going to ruffle some feathers. Retail sales in the U.S., advanced retail sales misses 0.1 versus 0.4. Not much of a reaction there. Let's see. Yeah, we were already selling off before that number came up. As far as economic releases, 9 a.m. Central, we have business inventories at 0.4% expected. 9:30, we have Fed's lacquer on credit markets, and then at 10:30 Central, we have 4-week bills for $35 billion. Looking at yesterday, let's turn on the screen share. There we go. So looking at yesterday, we opened right against the point of control from the Thursday sell-off, right at the point of control, right up against the 81.50 level we've been talking about for several weeks now. The opening type, although it looks on a 15-minute like an open drive, the opening type was actually an open auction out of range. The market tried to sell lower twice and was not successful, could not find the sellers, and then off to the races we go. A better view of that is right here. We open, test down, push to 84.25, pull back, higher low, so the expectation is for a higher high to continue. It's not able to push lower, goes to 84.25 again. So now it looks weak. My primary hypothesis yesterday was for a push higher and a rotation down to fill the gap, and that's what I was expecting here. 84.25 holds, so look to jump on for a sell into the prior day's range. Was looking for 75.25 target on the selling, and what happened was it pushed to 81.75 again, a double bottom, and then off to the races they go with the buying. And it just continued to push higher and higher as value, this shaded area you see in the background here, as value continued to move higher and higher throughout the day. The market ended up closing at highs, very bullish with a weak high, so the expectation is for a continuation overnight, and we got that pushed to 1896.75 in the overnight. We broke the prior year's high, which was 92.25, which incidentally is the overnight low, 1892.25. We see a weak push though through the high yesterday. It could only get to 93.25, just pushed it by 4 ticks. Quite a long way for the market to come. If you look at this, 1807.25 on the day session, 1803 on the overnight. Quite a long way to come to break it by 4 ticks. It's interesting to think that there would be a substantial amount of buying breaking out of such a long-term balance zone. A further indication, in my opinion, that risk is not getting on. They're not putting risk on as much as they did before at lower prices. Again, we closed at the high yesterday. It's a trend day type profile. It did rest quite a bit, so we did not create multiple high volume nodes, high volume distributions throughout the day. It rested a fair amount in the 90 half to 87 range, really fat in this area. However, it did behave like a trend. It continued to push highs throughout the day, and it finished near high. Short covering profile, looks like a short covering profile for yesterday. So that's pretty much summarizes yesterday. I'll show you what this is my hypothesis sheet or homework sheet. This is the stuff that I do for market prep. It's an Evernote. And this was for yesterday, and you could see here the primary hypothesis expected test to 82.25 early before responsive sellers step in to push lower towards 76.25, 75.25. That was my primary plan. The key target below is 74. If it holds Friday's range, then likely to push lower towards 67.25. So if it broke into Friday's range, it will push lower through to 67.25. That was what was expected. Hypothesis 2, attempt to push lower, then rotate up towards 85.75 and 88, which we got yesterday without the push lower, and a possible test of 92.25 high of year. Again, this is pre-market. This is all done pre-market. This is the prep or plan for the day, which I'm sharing with you verbally every day. The point of this, the third hypothesis tests toward 82.25 and 76.75 to settle in the middle with an upward skew. So basically fill in most of the gap area and then just sit sideways but in an upward skew, because we are above the composite point of control, and we are in an uptrend. Hypothesis 4, open drive higher as a continuation of Friday's action and test/break of 92.25. My point is that it went to hypothesis number 4, completely unexpected. It was expected in the form of the hypothesis having been generated, and it is part of the plan, but it really, I really didn't see this playing out. Hypothesis, the order of these hypotheses is the order of probability, in my opinion, of how things will play out on the day. And as you could see yesterday, it really didn't behave as it has been in this balance zone for quite some time. Okay, so my primary idea for the day. Well, let's look at the overnight. The overnight, very, very, very balanced. The Japanese market popped up in sympathy with the U.S. rally, so there's quite a bit there. Quite a bit of trading done there. Pretty strong moves up in Asia, but the U.S. opened and just pretty much traded sideways with an upward skew on a very, very balanced overnight session. 194,000 contracts traded, so that's very in line with the norm. So the overnight volume was actually in line. You would expect it to kind of to taper off or slow down, as we have already broken the high the day before, and you'd expect the market participants to wait. But there's a fair amount of participation. There's a fair amount of energy built up here. So nothing to glean from the overnight profile and trade other than the fact that the overnight low is at the prior high of year, 92.25, and we've pushed through to 96.75, which puts us a stone's throw away from the 1900 century figure. I have the tops I have above are 1902.25 on measured moves, 1902.25, 1915.50, and 1937.75. 1937.75. Those are the figures that I have above as targets on measured moves. For today, the expectation is that we do open out of range. I expect us to try to push higher early towards 95.25, the overnight VPOC. Find a lot of participation there, and I expect us to roll over and take out the overnight low for a retest of 90.5, and then the overnight or yesterday's point of control. That's the primary trade idea. In the past, within this balance range, generally we take out the high of year, we try higher, and then we end up pushing lower for the day. So this is the play I'm expecting. It's opening below the overnight point of control. I don't see an overnight profile that indicates a weak high or a trending type profile on the overnight or a double distribution. Not seeing any of that. So the expectation is that it'll likely try to push higher, roll over, and get into yesterday's range. And if it does, then we'll be looking to target the point of control, the LVN, the point of control, and then back to 88. And then that puts us only 7 points away. It could take back the entire day's range from yesterday. Below 86.75, there's pretty much thin air down to 81.50. So that would be the key target for the day. If there is selling coming in today, I would be targeting 81.50. The secondary plan is for it to in fact try higher, push lower, find support against the upper end of yesterday, and then turn around and continue higher on an upward skew, not breaking the overnight low, but taking out the overnight high to fulfill the overnight stat. Those are the two main plans. Today, I do not expect an open drive higher. The probability of an open drive higher is really not significant, but you know, anything can happen with these markets. So that's what I have for you. We'll see. You know, anything can happen. Really, it could test lower and zoom up. However, when I look at the participation, yesterday. Look at yesterday's delta on this new high. The delta was really, really pitiful. There was not very much lifting on the offer versus hitting the bid. There was participation on both sides. The delta was sideways as the market continued to climb. And you see that in the long-term chart. You'll see that despite making new highs, the delta continues to fall off in the long term. So here's the break higher from yesterday. Here's the delta that went with it. Not much participation there at all. Really. So you can see that here clearly. So I don't know what to make of that. It just shows me that whatever participation is, whatever price gains that are happening are probably happening on less participation by sellers versus aggressive participation by buyers. Let me say that again. It seems like higher prices are occurring as a result of less aggressive participation by sellers versus aggressive participation by buyers. In other words, as prices go up, as the market goes up, as prices go higher, prices are going higher more because the offers are being pulled versus offers holding steady in size and buyers coming in and lifting those offers aggressively. So imagine a market where right now the S&P is trading 1894.75, 94.50 by 94.75. Imagine if all of those offers canceled, pulled back to 1897, and a one lot traded at 1897. The delta will show +1 to where it is now, but price has popped up 2.5 points. That's the kind of behavior that seems to be happening. It seems like sellers are saying, well, if I want to sell, I'm just going to pull my order and sell higher, as opposed to buyers stepping in and saying, buy, 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 buy. This is what I'm seeing in the delta here. We've had some really aggressive deltas on the buy side in the, you know, from the 1750 into the 1850 range way back in December, January, when we first got into this this large balance zone that we're in. Okay, so I just don't. What I'm saying is that the prices are moving up. The range is tight. The VIX lows. So the VIX is challenging this trend line low. It pushed through to 12 yesterday. So the markets, the range and volatility are dropping. And in that situation, the market has a tendency to continue to climb higher, believe it or not. In a quiet market, you know, the old adage, never short a dull market. It's just the market tends to kind of climb up, and then sellers kind of pull their orders and look for higher prices as the market continues to chug along and climb up in an orderly fashion like it's doing. This discussion is really up for debate. I'm sure many people will disagree, but this is what I'm seeing. That's all I have for you. Good luck today, as always. I'm going to leave you with the idea that no matter what happens in the market, our goal is to survive today, play the probabilities that we see, that we have in the plan that we have, just as discussed just now, and to survive today, to come back tomorrow. Come back tomorrow, the day after, the day after, the day after. That's how you string together a career in trading. Doesn't sound glamorous, but that's what it takes. It takes managing and controlling, managing and acknowledging your state of mind so that you're not allowing the elephant within you, so to speak. I don't know if any of you have read the book Switch. But it's a very interesting book with regard when it comes to humans and how they respond in different situations. It's all about managing the urge to do something, the emotional urge to do something, and then just trading off of what the chart's actually showing you. I see a lot on the stream that seems to me to be more emotional based trading versus a logical, probabilistic, risk-defined, perspective on the market. And this is where we want to drive everybody to think in a professional way, to think from the perspective of probabilities, and to not get tied up with just one trade not going the way we want it. Okay? Good luck.